As returns on Kenya Shilling MMFs continue to fall, one of the questions many people have been wondering is, do I turn to Dollar MMFs and what are they? Dollar MMFs work on the same concept as the Kenya Shilling denominated MMF. So in the sense that a fund manager collects money from individuals like you and I. So in this case, they will collect the money in dollars and they invest them in dollar denominated assets. The major difference is the Kenya Shilling MMFs invest in shilling denominated assets. So if they are going to take T-bills, which are short-term government securities, they are going to take from CBK in the form of shillings. If they are going to issue a commercial paper, then they are going to take them in shillings. But the Dollar MMF is where the fund manager is taking money in the form of dollars and also investing them in dollar denominated investments, for example, debt that's in USD, government securities that are dollar denominated, and other options that are in dollars. So number two is, why turn to Dollar MMFs? This is mostly suitable for people who make money in dollars. So instead of always converting your money, for example, you have $1,000 today and you know you will need it in 30 days or 60 days, instead of converting it to Kenya shilling where you are going to lose a bit of money, because even if the dollar remains at 130, the cost of buying dollars is not the same as selling them. So if you need a few dollars in March and you have $1,000, then it doesn't make sense in such a situation to convert them into Kenya shillings. Number two is also people who are afraid of the forex exchange risk. So many times the Kenya shillings depreciates against the dollar. The depreciation often sees the fall or reduction in wealth that is held in Kenya shillings. So if you have $1 million bob today, when the dollar is at 130 and by December it happens to be at 150, then it means the wealth that you hold has depreciated. But if you had kept it in dollars, it will have appreciated. Now you can keep them in dollars in a current account earning no interest, but you can also keep them in an MMF, where then you still have access in the same way the Kenyan MMFs work. You can withdraw your money within 2 days or so, and the money is also earning interest. And in case the dollar then appreciates, if you converted and you got $10,000 today, and you probably will have spent about 1.3, and if by December, if for some reason the dollar then is at 150, it also means your investment will have grown to 1.5 plus interest that is also compounding every month with most fund managers. What is the interest rate for MMFs? Most dollar MMFs have rates of between 3 to 6%, which may seem relatively low when you compare them to the Kenya Shilling MMFs, where interest rates, even when they are down, they are still between 9 for most fund managers up to 14%. But then most of the benefit for the dollar MMF is the mitigation or leverage against the shilling depreciation against the dollar. So many times the shilling over the years, the past maybe 20 years, the shilling has been depreciated against the dollar. So this protects your wealth if you are in such a situation. Number four, it also works when someone is spending their money in dollars. For example, a business has some money that it spends in dollars. Instead of always converting them, it makes sense. You can keep them in a dollar MMF, and then you won't have to always convert. As in when you need the money, because it's very liquid, you will turn to the dollar MMFs. And most fund managers in Kenya, the ones who provide the shilling MMFs, also have the option of the dollar MMFs. Money254.co.ke has written more about MMFs in detail, including the difference between the shilling denominated MMFs and the dollar denominated MMFs. Click on the link provided to learn more.